Hi, everyone. Hi, Alexander, Jordan, Richard, Ryan, Cammy, Sinatra. A lot of people worried about the metals today. Okay.
Good morning, Dale.
How are you?
Very good, thank you.
Okay, so we had a little pullback from that 137 level in yen.
Can't see your charts yet, mate.
Oh, there we go. Buddy?
Just saying, couldn't see your charts. There we go.
Yeah, there we go. All right, so it's backed off pretty good. We have had divergence, may not be over yet, but the form is there for a 3 drive. The only thing I'm waiting for is the Dixie now to trade over 106, see if it could carry the yen or not. And what are your guys' thoughts? We should have this washout in euro. You have downside targets, guys?
That's it there, that big blue line.
Okay. Well, if it takes it out.
Oh, if it takes it out, oof, open the trapdoor. But
I mean, we're only 50 away.
Yeah, it's going to be big. It's going to be big. I'm looking at it for a long play, actually, because I think we are being driven by a lot of end of month stuff. There's nothing in the news or data that suggests dollar should be ripping to the moon and euro should be sucking. So I'm thinking this is end of month, and as Kay said yesterday, it's all about the timing as much as the levels. But that level 103.40 or 49, I think, was the low we got to last time. It's going to look pretty juicy if we get down there.
Yeah, that's 103.59 here, and then this was 34. Oh, 49. You're right. And then you go back, it's 350, 340. So at least one buy stop, sell stop here. A lot of people will reverse and get short there. I'm kind of with you, Ryan. I would just let it go. I've seen counts like at 102.35, some kind of fib extension, and then just wait for it to trade back over this blue line if you want to be conservative.
If we didn't have this end of month stuff going on, I'll be looking to long it with a reverse stop, like you say. But no, I'm more likely to go long, and if it blows, just let it go, and play the clock and see what happens. Tomorrow, Monday, Tuesday, that sort of thing.
So, Kman, did you put your toe in the water on shorts yet in US dollar yet?
Did. Yes, I did yesterday. But I mean, I must say, people in the room, and I have to give credit to the people in the room. They were looking already at a possible false break above the prior highs, 136.70. So then we briefly touched 137, and I had my eye on the yields, and I said, like, there's something out of sync here. And with the yields were coming off. Dorian was pushing on. It was
didn't we talk about that yesterday? That something has to give.
Exactly. So
don't give all the credit to the chat room.
Yeah, I went short at 136.85, and then bought back on the way down because we're still in end of month, quarter, half year, and then bought down as low as 136.01 this morning. So yeah, it's pretty cool. It was a nice play and a nice let's call it a teamwork. Because a lot of people went short actually up there, so we had the stars were aligned for a false breakout there, and also on the correlation driven with yields and things. So it's was a real nice trade. I'm still short just a tad, just to see if we are going to cap this 136.70-75 again, and if so, let it run a little bit into the new month. But I'm not excluding new highs. We will see what happens after all the end of month flows are done, and we start the new month tomorrow.
Okay, and this was really my tell. And now, do you recognize what a 3 drive formation looks like?
Yeah,
1, 2, 3. Okay, so
nice
pound holding up a little better. EG is under some pressure. Thoughts on euro pound here? Maybe this last drop is going to be a break to buy in EG, Ryan?
Yeah, low 85s. I'll be interested. I'm still in the same camp that I want to see this going up on the back of good news from Europe or more hawkishness from the ECB. I wasn't confident in this rally. 87 is the key number for me. 85 down below. In the middle here, I'm not really interested. It's just 1 minute it's up, sailing high above 86, and you think, here we go again. But look at the trend. The short-term trend. It's definitely up. The lows potentially are coming in higher. So it's pointing towards upside more than downside. We'll look for the levels. If 87 goes, I'll have a go at running with it, but I might try a short in there as well and put it on a reverse.
Okay, kind of interesting with the Dixie almost hit new highs, and it might have another 100 pips in it. Canada, pretty far away from a recent double top. So just something interesting. And also Aussie up with the dollar up. Aussie's only about 100 pips away, 130 pips away from this wedge line. I've had this line drawn for weeks, and I'm going to try it down there if I have some RSI, some non-confirmations. Any thoughts? Because commodities are getting killed as well.
Oil again. That's back under 110, taking a bit of a slap.
I think that was a failing rally right there that we had yesterday, 115. And if you just take this measured move, we're headed towards major support at 94 if this is a little bear flag. It looks like the Fed is getting its job done, and I can't think of a commodity group. Even the grains have sold off a little bit. They're much more resilient, but they're getting what they want with, copper getting, massacred.
So lower prices.
So I've got to ask you guys, and good morning team. I got to ask you, do you guys think this is disinflationary or do you think it's deflationary? Like, is this going to be a permanent pullback in commodity prices, or do you think it's just going to be short term? Do you guys have any opinions there?
I think it
depends whether it's a short term or long term move. This one, right? I mean,
right. Like right now, I mean, we got to assume it's just disinflationary, like just like this short term phenomenon that we were feeling. But do you or do you think that this pullback that we're seeing in commodities is more of a a longer term effect of just a slowing economy? So I guess that's the question.
Yeah, demand destruction.
Yeah, do you want to be long commodities and positioned for long commodities if every country pretty much in the major global world is heading for a recession?
Yeah, but
maybe grains, because people will have to eat during the recession.
Yeah, you're gonna get your outliers because obviously the Ukraine situation, a big grain producer, that sort of thing, fertilizer. There's going to be things from that, but overall, you look at investors. Sometimes they don't go as deep as what's happening in Ukraine. They're like, well, I'm going to invest in where the strength is, and if commodities are heading down, if economies are heading to recession, then you're going to go running for safety, like bonds over things like commodities.
Well, I think it's all really the key is going to be the dollar. Okay, and if we are putting in a major top, and if the yen was any kind of foreshadowing of the dollar, we're headed for the third drive up here. I think early in the week, Blake asked me if I was looking for 106 first, and so we're almost there. You get a bear market in the dollar, and that'll support commodities and metals and everything, and stocks even, I believe. So I did hear Mark Newton, Blake, a couple of weeks on CNBC, and he's looking for a market bottom. He thinks it was either what we had last week or one more low, but he was talking, and that was a week ago, about an important dollar top coming in here. With that, we were a couple of weeks from a dollar high.
Yeah.
So
didn't
when Mark says something, I listen to it.
Yeah, Mark is great. But didn't
we knew him before he was
Farm?
famous.
Right now he doesn't even give me the time of day.
Yeah.
But didn't Peter say that? And I missed this part. I just kind of read it in one of your headlines there that he thinks that the Swiss National Bank, that move, and then we saw the Riksbank last night as well. I mean, raising rates, the Swiss National Bank raising rates, trying to raise them out of negative territory it's one of the signs that the dollar will probably be topping soon. So I mean, didn't he say that?
I think he said so yesterday.
Yeah, I don't remember. What stays fresh in my mind is for him monitoring the yen. He's actually looking at the 40-year bond. Do you do that too, Kman? He thinks there's not as much noise in it, and it can give him market tells.
I'm not looking at it because the Japanese are rarely putting all their money that long out. They are doing long-term stuff, but no, anything. I'm usually stopping around the 20 to 30s.
Okay. All right.
Hey, can I?
Go ahead.
Well, I'm sorry. No, I want Kman to finish up what he's saying.
Okay.
I had something pop in my head, but I'll talk about it here in a minute. Continue on, Kman, regarding the bond market.
No, I'm done. I'm done. Go ahead.
Yeah, and speaking of bonds, I mean, they look pretty good. We talked about that last week too. So
here. Matter of fact, I'll take the charts from here. But let me just show you guys
look at that.
Here's a 10-year. I mean, we broke an ascending trend line. We've talked about like this false breakout above these highs here in the 10-year, and now we're kind of breaching some minor trend lines. So you're right, Dale. But bonds look a little bit better. Here's your 30 years breaking down a little bit as well. But are bonds catching a bid because it's risk off? you're finally seeing bonds catch a bid. What do you guys think there?
Can I ask you a question? If you look at U.S. rates and you see those yields coming off, why isn't the dollar weaker?
Yeah, right. So I would think that it's more of a risk aversion bid.
Well, I don't know. I think we have to wait to answer this question next week, because we are end of quarter, end of half year. There's a lot of wishy-washy going on, a lot of rebalancing, and I've read and I've seen people are talking. It's going on in all assets, and this could just be end of half year,
And I want to point out, taking the S&P, and let's just talk about the beginning of the quarter. So let's go to March 1st, somewhere around here, right? I'm going to say beginning of March, right? We're down currently 14% for the quarter, right? And for the year we're down 20 some odd percent, right? Now I'm just talking the S&P in general. So all the flows that are coming through right now are probably massive, and I bet they've been, ongoing throughout the course of the week. I mean, we've seen the dollar, at the beginning of the week, really just kind of take off outside of this triangle. So the question is going to be today, just because everybody's expecting, like in the currency market, everybody's expecting, continued dollar flows, bullish flows. Have a lot of them been processed this week? I would assume they have been. So this is going to be a really interesting, next few hours. Hey, when do you, Kman, Ryan, and Stel? I'm assuming Stelios is out there somewhere.
I'm here.
Hey, what's going on, Stel? When are all the best flows coming through the market in your views? I'll tell you based on my experience, but go ahead.
All the time at the moment. It's changed. Before it used to be, the big London fix, but now you see them on the hour, 10 minutes before the hour. It's coming through all the time. I mean, look at euro dollar. It's been offered pretty much for the last 3 days.
Yeah,
with barely a bounce. And you got to look at it and think, well, has anything changed in the fundamentals? What's changed that the euro dollar's fallen 300 pips in the space of a few days?
Christine Lagarde got older by 3 days.
and a little less tanned.
Yeah, a little less tan. There you go. No, but
so the question really to ask for me anyway is, like Kay said, look at next week, probably Tuesday, because tomorrow's the first day of the month. You can get funny things going on there as people put stuff back on that they closed out for half year end. Monday's a US holiday. So, if we're still sub 104 in something like the euro come Tuesday and we stay below it, then you can start to think, actually, something's changed. And then you set yourself up for that. But if we get to Tuesday, we're back above 104. I wouldn't be surprised if we're going back up to 105 and cables back up to 122, 123. That would not surprise me at all.
All right. Well, speaking of the cable's been, hit. We're at the 618 retracement, but it's holding up a little bit better than the euro. And, you take a look at like the euro sterling's coming under some pressure too, because we're at this ascending trend line that we've been following now for quite some time. You can see going all the way back into April. So, but this euro sterling continues to fail at 86 pence, and I've kept my hands off of it. But man, I wanted to pull up this Euro Aussie. If you guys are one of the trades that I always pay attention to regarding risk aversion and risk on, risk off is the Euro Aussie. And when the Aussie outperforms the Euro, it tends to be better for risk. Now, obviously, flows are going through right now, but I want you to pay pretty close attention to this pair. Just because it is trading heavy. We failed at really key levels in the Euro Aussie over the course of the last several months. I mean, if you take this breakdown point from February of 2021, when we crashed through there earlier this year, that has held us on rally attempts. You can see back in March, we stabbed up here. You can say this is a whole zone, right? I'll just draw this out and then remove it really quick. This whole zone right here, we rallied up there, failed, rallied up here again just a couple of weeks ago. I'm short, so I'm going to talk my book a little bit here, just on being on the short side. But more importantly, it's the failure where we failed, kind of a double top. I'm looking at it more of a wedge. If we come down and break through like this 149 and change, like 149.70, which is also a 618 retracement right through here, we start breaking those levels. And, if you're looking for a clue, and that we're going to be way past the end of month, end of quarter, end of half year flows. If we start breaking through here in the next week or two, if you're looking for a bottom in risk, and you're sitting there going, wow, volatility is not breaking out, which it's not, by the way. And you're like, I think that the stock market might actually forge some sort of low down here because we're at, channel lows. And you guys know my opinions as of last week. I think that we're in a bottoming process, and, we'll rally back to maybe 4,000, 4,100 before we roll back over again. This is a bear trend, but, in a bearish trend doesn't mean you're going to go straight down either. So, but if you're looking for those clues in S&Ps, I would focus a little bit here on the Euro Aussie. Obviously, we're all looking at the dollar too, and as Dale's pointed out, Dale, you're not right yet, but your call has been right this week, looking towards 106 before we see a failure. If this is a 3 drive, right?
Right.
Yeah.
I like your number 1.272, right around there.
Hell, we could get there today.
Yeah.
Following today's flows. I mean, we could just depending on how
early next week
are. Think about it. I mean, we could rally to 106. We may not make it all the way to the 127% extension, but today we could have the euro spike down towards 103 right at the London F.A.C.E, and and maybe spend the rest of the day reversing as all the flows get pushed through. I mean, I don't know. I mean, that's just kind of a thought process. We didn't get to Stelios or Kman, but again, I want to kind of go back. In your experience, where are the best times for flows? Because Ryan answered. What do you guys think, Kman and Stel?
It depends on the products you're trading. I agree with Ryan. I mean, the London F.A.C.E was always the the time of day when a lot of movement happened, and you could anticipate it a little bit. But it really depends on the product you trade. Like personally, when I was trading derivatives, when I first got into the office at 7 a.m. was the best flows. Because you caught the previous market makers were leaving the desk and they wanted to get rid of positions, and you got the the best prices you could get. But this obviously depends on the stuff you trade. So I'm not much help, am I?
Next, please.
Yeah, well, I mean,
ahead,
those days you will get the best flows, or not the best, but the biggest flows around the fixings. But in normal time zones, the best is the European afternoon, New York morning hours, where you usually see the highest volumes in normal times.
Okay.
But were you asking specifically about the end of month and stuff?
Yeah.
If it's about the end of month, things have changed since since the past couple of years. Actually,
they've gotten smarter the last 5 years or so.
That's the sirens. There's a company. It's a company or a system called Sirens, and they have been marketing very, very hard to all asset managers to change their way of executing their interests at the end of the month, quarter, half year. Instead of doing it at the 4 p.m. fix or on the last day of the month, they have pushed very hard, and they had a lot of years to spread them out over the last week or so or even longer of the month. So we have seen those flows. The models were calling for dollar buying into the end of month and end of quarter. Those flows have really been there. We have seen them the whole week. The dollar has been pitched, right?
Right, and it's interesting that you point that out, Kman, because I personally have seen that dramatically change over the last several years. But who is doing the pushing? What's the company called? Or system called? Excuse me. I'm sorry.
Sirens.
Twilight.
Oh,
do we lose Kman?
Cosmos.
It's called Sirens.
Yeah, Sirens is the system, I think, but they were the ones who made the most publicity about it. So, but a lot of asset managers have been doing that already since the pandemic, since those wild moves in equities as well. The word did the rounds that even the huge wealth managers, they were doing their FX hedges on a daily basis. I know one gigantic Singaporean entity is doing it on a weekly basis, for instance.
Oh, it must be 3 arrows. I'm just
no.
I'm joking.
Something
sorry,
better
guys,
than the
if
3 arrows. Come on.
Got crypto exposure.
I wouldn't even be talking if it would be 3 arrows. I mean, no, it's something much better than that.
I was joking. I was totally joking. It's a bad joke. It's a bad joke, and it's 5 o'clock in the morning for me here. But thanks, Kman.
Don't get much later in the day, Blake.
I know it actually gets worse. Hey, going back to the dollar yen really fast, and we're going to be looking at this one as we have the PCE data coming out here shortly. Yesterday, we saw like a really, if you're looking at the dollar yen here, you saw a nice little false breakout yesterday in this 4 hour, and you can see this is like a long upper shadow doji, which tends to be a bearish sign from a candlestick perspective, but we had this false breakout. You talked a little bit about it as well, Kman. It's going to be interesting to watch the yen. I think here as we are seeing yields come down. Do you think the yields move is going to be more of is the yen move going to be more of a yield story at this point? Because if you let's just let me match it up with
in one word, totally.
You think so?
Yeah.
Okay. Let's just grab that.
Just to illustrate what I'm saying, we've seen the S&P come down 20% and dollar yen or cross yen make their highs. So it's a yield story.
All right. Well, it's gonna be fun to watch, and the dollar yen has been, let's not forget, the dollar yen has really been the leader early on in the dollar rally. If you look at the dollar, it really has been more of the dollar yen going back for months, you know, on the big breakout in the dollar yen. Remember when everybody and their mother's brother's uncle was fading the dollar yen move, you know, when we were down in the 120s, this really led the dollar index higher. And then, you know, obviously it took hold almost across the board, but it's going to be interesting to watch the dollar yen moving forward, because Japan, you would think, has to do something at this point. I mean, you've got literally almost every central bank making a move. You would think naturally the BOJ would at some point. Hey, we got PCE data coming out. I met with Chris Weston last night for the trade-off. I haven't seen that show come out just yet, but we talked a lot about this yesterday. But it's something that we, ForexAnalytix, we as a team have been talking about for the last, 6 months or so. Data is going to matter, and data matters even more as we are now starting to look for clues on economic, for every economy, how every economy is faring, and how aggressive or hawkish or dovish every central bank's going to be out there. So this PCE data coming out today, GDP data yesterday, not so important, but yes, today. Go ahead.
Sorry, mate. There's just a headlines out from the sources piece on the ECB on the PEP and fragmentation stuff. They're going to divide the Eurozone countries into donors, recipients, neutrals, reinvestments. So there'll be purchasing that would include like Spain, Italy, Portugal, Greece, and donors of proceeds would include Germany, France, and Netherlands. So it's pretty much as we expected. The core countries paying for the
free money for us. Woohoo!
Yeah, you Greeks,
the
man.
cash for Stel.
I'm telling you, what the, I'm
move there, become a
seriously,
citizen.
we got to all move to Greece because they get everything for free, and they've got nice beaches. What the hell?
Yeah.
Charles asks, "Hey, what time is the Europe and London fixing? For us, it's at, well, I know what time it is for me. What time is it? 11:30 a.m. Eastern. What time is it for you guys in London?
The main London fix is at 4 p.m. London time, 3 p.m. GMT.
4:30, 4 o'clock. So in 2 hours and 30 minutes. That's right. It's 2 hours and 30 minutes. So it's 8 o'clock for me. Yeah, that's right. So there you go. 11 a.m. Eastern. And one of the things where we're always like talking around in our chat room. By the way, if you guys don't know the ForexAnalytix chat room, let me just show you guys how busy it is around here. I think I got in front of my computer about an hour ago, and this is just the general chat room. So I think I got up somewhere around here, maybe a little bit earlier, somewhere around here. And you can just see how active it's been just in the last hour and change. Just that's the general chat room, not including the Flowonomics, which is the macro chat room, the trades room, where people are posting what they're buying and selling, Spanish chat room, news and research, where we put all of our, news that we find. So if you guys want to join a community, that we talk about the markets, we don't talk about religion, politics. No one sells anything. If you do, you're immediately blacklisted forever. It's just a real safe community. Come check out ForexAnalytix. $1 for 10 days. Very, very active community. And a lot of the people I've been chatting with Rick since 2003. 19 years. He's the oldest and probably the most weathered person I talked to in the chat. I'm joking, Rick, if I know he's listening in right now. Totally joking. Dale's definitely the most weathered person I talked to. Just kidding.
Yeah.
Dale,
Well, no, you're right. It'll be 104 if you live in over 100 degrees. You're weathered.
So Tony said my speakers aren't very loud. Can you guys not hear me very well?
I hear you good.
Okay. All right. I don't know. All right, guys. So let's go ahead and somebody asked if we use Slack. No.
It's
no.
It's a proprietary platform.
Proprietary, buddy. We don't use any basic garbage. Sorry, it's all proprietary. All right.
Okay,
so,
5 seconds.
How many?
3, 2,
Damn it.
1. Ignition. Canadian GDP in line.
Canadian
Who cares?
GDP is in line. PCE, have you guys seen it yet? You guys holler it out.
Personal income in line. Jobless claims roughly in line. I don't see PCE yet.
Nothing yet.
All right.
Here we go.
Stocks are rallying. It's got to be some
PCE
data.
in line. Miss of expectations, but matches last month 6.3. Core PCE down, lower than expected, 4.7 versus 4.8 expected, 4.9 prior.
Do you know what we are? Bad is good, good is bad. And we're in that market right now. Bad data is good for stocks, good data, bad for stocks. Think about that, moving forward. I know we've kind of been that way for the last week or two, but stocks are rallying here, dollars pulling back a little bit. Now, do keep in mind there's going to be a lot of flows coming through the market today specifically. So just be really, really careful with what you're doing. But look at the equity markets, little S&P rally here. Guys, it's going to be a very, very busy day today. So make sure that you are on your toes. This is not a day to be, really over leveraged in the market. You got to be very, very careful. You guys have any parting thoughts before we pass it over to Dale in his interview?
Arno, I had a last minute cancel from Arno Ventures.
Oh, great. Scott said Slack is awesome. Look, I use Slack and Discord, and I use all sorts of what other like communication devices. We use them all, and I'll tell you what.
Carrier pigeons. No carrier pigeons. No.
And carrier pigeons. I'll tell you what, I love our chat room, and it's great because we can, we can have side conversations, and it's nice. It's a really, really great place to be. All right, well, since we had a last minute cancellation, which does happen from time to time, and that's a guest that's been with us many times, correct?
Yeah.
Oh yeah, it's
something
just,
came up. It's not a flake out.
Yeah. No, it happens. Look,
I'll try and have them tomorrow. We'll see.
That'd be great. That'd be cool. So just note that the S&P is nearing the 618 retracement. It's a golden fib level. I think we all need to be pretty respectful of that. Let's go through it since we didn't hear from Steve. I see Steve has popped in there. Steve, do you have any? I don't know if you're live right now, but if you have any thoughts going into today, let's hear them.
I am alive. Yes.
Yeah, he is alive. All right, there he is. I am alive. So, what you got, Steve?
Nothing much.
Okay, Pat, Stelios, what do you got for? I'm just kidding. I'm joking. Go ahead, Steve.
The rejection in the S&P that preceded the rejection in crude oil, in my opinion, are the biggest themes of the last few days.
Yeah, how do you feel about crude here? Oops. Now you know how I feel about crude, but how do you feel about crude?
I wrote a chart of the day 2 days ago about crude, and we've been discussing that on the morning edge. I think that crude is very likely to continue lower. I don't think we've seen the end of this corrective move lower. So I think there is more downside to come, most likely.
Aha. All right. Well, and this is Steve's view on crude oil, which is right here. He's looking for some downside pressure. Any reasoning, macro reasoning that you feel that way, or is it you just feel technically it's ready to roll over here?
I think it's mostly, for the time being, I think it's mostly about recession fears. I think that's the biggest factor playing a role here.
That makes a lot of sense to me. Yeah. So, all right. Well, Steve, you have any thoughts on the currency market and these end of month, end of quarter, end of first half
of the world? Anything on this end of the world flows?
Any end of the world? Go ahead.
Buddy, come on.
You are funny.
As long as there isn't funny. As long as there isn't fundamental realities remain, I don't see any real reason why somebody would expect the dollar to turn. Euro USD got earlier in the week once again rejected from the descending channel. So in my opinion, the path of least resistance in the dollar remains higher until proven otherwise. So I don't necessarily expect that the end of the month is going to bring something different in FX or in the stock indices.
All right. Sounds good.
I can't believe we haven't spoken about cryptos yet.
I was going to say, Bitcoin, we are below the 19th. Let me just go ahead and pull out that chart. The 19,666 previous high back in December. I thought it was 2018. I'm sorry, December 2017. I misspoke whenever I was talking about it earlier. I don't know when it was, but anyway, we are slightly below that level right now, but we're also at a 618 retracement here in Bitcoin. Now, this is a pennant, and check this thing out. I want to point this out to you guys really quick. This pennant, if it starts playing out, so obviously if you're bullish and we break this 17,500 level, look at the target of the pennant. And I mean, the target of the pennant takes you down to about 7,000, which
I think it's easily doable.
Yeah, now check this out. I mean, you go back to the beginning of time of Bitcoin. No, really like early 2017, 2018, spike low 2020. Then you've got
work.
Yeah, I mean, look, 7,000. I mean, can you imagine? I mean,
yeah,
I can imagine. I know we can imagine, but can you imagine like the destruction of that? I mean, it's I know we talked about the 1,000 times here. This is .com bubble all over again. We've been talking about it for the last 2 years, but really it's come to fruition now. And this is where, it looks like it, right?
First of all, it's a very easy reality to come into fruition, right? Because many people don't realize that the move to the downside has still been rather orderly. In my opinion, though, we're getting very, very, very close to a level that we're going to get very frequent liquidations. And these liquidations alone, in my opinion, are going to be doing most of the bearish work from this point forward.
Yeah.
So it's all about getting closer and closer to a really ominous triggering point. And in my opinion, once we start getting some distance from the 20,000 mark to the downside, of course, we're going to be getting more and more of these forced liquidations. And since these instruments are not really that liquid, I think that these forced liquidations are going to create a big acceleration to the downside. And I know it doesn't seem from a dollar perspective that far, because somebody might think, we've already covered the road from 69,000 to below 20,000. So, I mean, what is another like 10, 12,000? The answer is it's another 50%.
Right. It's true, and you're exactly right, Steve. You're going to see a lot of mass liquidations at this point. And look, I'll tell you what I won't forget is I won't forget all the laser eyes. I won't forget who has been bullish and who has been, Bitcoin's going to 1 million. I know exactly who those people are, right? So
what should we do to them?
Well, it's just you got to think about like moving forward. It's the same people. If you could have gone back in 1999, it's all the people that were doing the same thing, regarding the internet stocks. Now, and internet's still here, and it's obviously we thrive from it. And Bitcoin's going to be the same way. Crypto, I think, is going to be the same way in a much smaller scale.
But I'm not that sure as the internet, Blake. I mean, I'm not that certain that actually I'm pretty sure that crypto won't serve the role that internet served. Right. I mean, it definitely won't change the world in the extent that internet.
That's why I said on a much smaller scale.
Yeah.
Right. Yeah. On a much smaller scale. Digital currencies will change the way we do finance and the way we maybe track data, but it's going to be it's like
So the technology is going to stay there.
So exactly, the technology will stay. Now, from the 19,800 cryptocurrencies, you can guess how many of those are going to be with us in a few years.
Yeah.
In my opinion, it's going to be a miracle if they're 10.
Yeah, I'd say close to 100. But anyway, but one of the things, and I need to mention this really quick, and Stelios, we want to hear what you have to say as well. Regarding the crypto market, is there will be leaders that will emerge over time, and that's something that we will be looking at years from now. Whether it's 2 or 5 years, there will be whether it's Bitcoin ends up being the end all be all, or Ethereum, or whatever hell other product pops up. There is going to be it is going to stay in one way, shape, or form. So I'm sorry that I just needed to mention that. Go ahead, Stel.
One thing I wanted to answer, one of our friends is asking, does Bitcoin trade technically? And the answer is yes, in the last year and a half, because it's become, it's had institutional interest. And if you look at the chart, the top almost coincides with the introduction of the futures, and ETFs came in and all that. So once you get the big money coming in, the nature of Bitcoin as an instrument changes, because it goes from being traded by initially a bunch of geeks and people who think, oh, it's going to change the world and all that, and usually these guys just want to buy some. They just want to get more and more and more. I mine them, I buy them, I do whatever I can, and price goes up. When the big money comes in, they obviously will play it both ways, and they by definition it will trade technically. So I think that was a big shift in the character of Bitcoin and all the cryptos. And I do agree that I think only a small subset of them is going to survive. Or what role will they play? I don't know, but I don't think, I've said this so many times, I don't think they'll ever replace the dollar, the euro, the yen. They just cannot. Because the moment they replace it, the next day the governments go broke. They're insolvent because they can't issue more currency. They can't issue more. Anyway,
and you're right.
Even if they have their own coin still, like James Henry Anderson was talking about, CB.
Oh, yes. Central bank digital currencies,
happening in gold. Gold is really coming to life here. I just want to point it out.
Yeah, I think that's and by the way, gold is probably off of triangle support. Let's take a look.
And Blake, I just want to talk about one more thing, because I've lived it. And it's in regarding our no. I almost forgot. Okay, I almost forgot. But it's about the trader funding program. And I've had a lot of people over the years say to me, Dale, I'd like to be able to trade for a living. Can I do it with 10K? And I go, yes, if you want to live beneath an underpass. And for you to build that account up over time, think about how much time it would take. And back when I started, they didn't have prop trading firms. Okay, so it really is an avenue for people who are undercapitalized to get from point A to point B so much quicker, especially if they have skills. Okay, instead of turning their small account into a bigger account, they're right there. And I'll tell you something, money comes and goes, but time is gone forever. And if you could get from point A to point B to be in the game while the casinos are still open, I think it's a great program.
Thanks.
A great option. Great option for people.
It is a great option. You know what else? I don't even also say that if yes, if you want access to larger amounts of capital, it's great. But if you have $100,000, like let's say you got a $100,000 trading account, and you get out and you're trading and you lose 10,000 of it, and you lose 10% of it, and you're like, damn, I had $100,000, now I have 90. You could also go to the trader funding program. It's $1,000 evaluation fee, your assessment fee. And if you think you're a good trader and you're like, okay, well, I can make 10% in a demo account and not lose more than 5% in a trailing drawdown, and I can make 10%. Once you do that, then you access $100,000 and you keep 75% of the profit. So now you're not risking your $100,000. Right. You're risking our $100,000, and we take all the risks. So now you only get 75% of the profits because
So even people that don't need it, it's an advantage because of risk management.
And we had 2 traders actually qualified this week. I think thus far, Stelios, correct me if I'm wrong. 2 traders get into the live trading environment.
That is correct.
So, so. And it's still Thursday. So anyway, thanks, Dale, for bringing that up. The trader funding program is
don't quit your daydream, guys. Okay, if that's what you want to do, don't quit your daydream, but don't try and trade for a living with 10K either.
Yeah, I love that tweet yesterday. Dale,
thanks for the retweet, man.
Hey, talking about gold, real
invoices in the post, mate.
Talking about gold, so gold held that 1800 level, and actually on the trade-off last night with this was one of my charts. I said I titled it "No Country for Gold Men," right, in the movie. No Country for anyway, a little play on that. But I said, hey, as long as we stay above 1800 and going into the end of month, end of quarter, look, we probed this trend line right here. Right, really important. This triangle. We tried to break below it. So if we can really hold above, this 1800 level, maybe gold is maybe gold's telling you something. Maybe gold's telling you that this dollar might be near its highs as we go into this end of month flow situation. So I would be watching gold. If gold can't break below 1800, I would be very careful about chasing the dollar higher today. That would be my thoughts. Hey guys, we've got about a half an hour before the morning edge, which is exclusive for the ForexAnalytix subscribers. We do the morning edge show where we go through, all of these instruments. We go through, our bias chart. Steve and Stelios go pretty deep into other assets as well. That comes up in a half an hour, so I'm going to wrap this up. But any last minute thoughts as we go into this, like one of the probably the biggest volatility days of the year thus far? Any thoughts?
Yeah, I have 3. If I may, watch
please.
Kiwi on the close, 62 the figure or not, if it holds or not.
Yeah,
we are very close to a big level on the Euro Canada as well, 133.90 figure.
Just traded that as well.
And
what are you doing with the Euro CAD, by the way?
Well, I mean, I'm monitoring it right now, but I think if we get a clear break of 133.90 figure, maybe the close or the opening tomorrow, this could be really in trouble.
Ooh, God,
and final thought that I have that if, unlike Dale was saying, you still decide to live under the bridge, make sure to be close to a Wi-Fi hotspot. Have a good day, everybody.
All right, thanks, man.
I have a few spots.
You'll be there all day. Great, awesome.
Yeah,
Ryan,
sweating under the underpass. Go ahead.
Yeah, I've been piggybacking on the back of Kman's look at the EuroCAD. I've just jumped in a small long there. Let's play the level.
Long here. You're betting on a non-breakdown. Okay, all right.
I've been running some sell stops at 133.80 to catch a break, but I've pulled those because I don't want to get caught in any of this end of month crap. So I've gone with a wide stop, let it play out, and see what happens. Big levels are big levels, as Kay said. Look at Kiwi dollar 62. It's a multi-year level. Goes back to I think someone in our flow show said 1994.
Benedict in our chat room, and I know he's probably listening in right now. He listens in. He's been listening in with me into our shows for like probably the last going on a decade now. He pointed out this cup and handle pattern. I wasn't looking at it as a cup and handle, but man, if it does play out, it plays out to 60-50, which because this is the depth of the cup right here. So we're taking it from the handle top, which would be right there, 60-50. I mean, that's a big break if it does break. All right. Well, thanks, Ryan, for pointing that out.
Just a last thought. Be wary of tomorrow as well, because when we get to this half-year period, you can see some funny flows and fixes tomorrow as everyone who rebalanced for half-year end and got out of positions, took profit, put those back on and rebalance for the second half of the year. So you can see flows coming through tomorrow as well.
Okay. Thank you very much for that. Stelios, any last minute ideas? He might be gone. Steve.
Yes.
Scuba Steve. That's an old Adam Sandler.
Okay.
You ever see what's the name of that movie? Daddy
Day Camp.
No, Big Daddy. Yeah, Big Daddy. Big Daddy. That's a funny movie.
He was very good in Hustle. If you haven't seen it yet.
Oh, that's a great movie.
Oh,
Yeah,
that was a good film.
Loved it. All right, Scuba Steve, you got any ideas with going on here?
No, it's exactly what we said before. I told you what I'm watching for, and if I have to add something in FX, I will agree with Kman's comment about the importance of 62 level in the Kiwi and the equivalent level actually for the Aussie, which I talked about yesterday on the morning edge, is the 6830 area, which is a confluence of supports, and we're very close to that as well. So, a break below these levels can actually open the door for a lot more losses in this pairs as well. Now, clearly, risk of environment is going to, help these themes play out.
All right, and Dale, I know you brought up this trend line. I'm looking at it as a channel, have been for a long time. If we can get down below 68 cents, that might be a nice opportunity for the Aussie. Longer term, I'm looking at a longer term big inverted head and shoulder pattern. By the way,
I think we're like 100, 200 pips away from a bottom.
Yeah. I think we're going to have a lot of support down here. So hey everybody, I want to say trade safe. Thanks for being here today. Thanks for all the support. And remember, check out ForexAnalytix. Come join our chat room. Come be in our community. We're very active and we talk all day. I spend more time in my chat room than I do with my family. So,
they're your family too.
They are my family. That's right. Even more so than my kids. Wait till my kids go to college here in the next couple of years, and then I'll be married to you guys. That's scary. I know. Anyway, thanks everybody. Thanks Dale for always being here, and thanks for hosting as always.
All right, guys. Well, thank you, team.
Thank you, Dale.
Thank you, Dale.
Good luck today. Call me Goldfinger. I love only gold. I'll talk to you guys tomorrow. We'll wrap it up. Thank you, everyone. Check out the Traders Funding Program if you want to get from point A to point B. It's an option for you. And good hunting the rest of the day. Adios.